If you own XRP, the news that just came out is important, but let me take that same sense of urgency and turn it up a notch, because what just came out of the White House isn't just another headline. It's the kind of geopolitical spark that has caused huge market changes in the past, the kind that liquidity providers respond to within seconds, and the kind that can change how capital flows into digital assets in a way that most investors won't even understand until it's too late. XRP numbers from CME Group are also new and interesting, and there is a 500x prediction going around. Some people think it's crazy, while others think it's logical. Either way, it's worth looking into, because if it did happen, it would only happen in the perfect storm. And right now, that storm looks closer than most think. Thank you so much for listening in today. Before we go any further, make sure you're subscribed and that notifications are turned on so you never miss these quick updates. When news comes in this fast, the first people to respond win. Let's go back to what CME Group just announced this morning, because those numbers aren't just loud, they're eye-catching. I quote, "Since launching their XRP futures in May, they've seen incredible demand." That's their words, not mine. Over 567,000 contracts, or nearly $27 billion in volume, which is the same as 9 billion XRP moving through a regulated channel. Here's what that means in plain English. Institutional interest is already huge, and it's been there for a long time. This isn't speculative hype. It's demand from people who don't post memes, chase pumps, or waste time. But here's the important part. Futures don't change prices or make more people want to buy things that are already on the market. They're just a practice run. Spot ETFs are where the real action starts, which is why things are getting heated up. We're talking about Bitwise, CoinShares, WisdomTree, Canary Capital, and finally the big names like BlackRock and Grayscale, which soak up liquidity like a vacuum does dust. ETFs will need spot XRP that is held in a trust. This is direct buy-side pressure on a limited supply. It is mechanical, can't be avoided, and can't be stopped once it's accepted. CME pretty much just sent out a signal that said, be ready. Now, let me talk about something important for people who want to be ahead of those moves instead of responding to them after the fact. At the same time, mainstream crypto media is doing what it always does, making things more confusing, spreading lies, and using clickbait headlines to get people to read them. For example, Coin Bureau's story today said that Chris Larsen cashed out. Larsen and others recently put tens of millions of XRP into the world's biggest XRP treasury, but this isn't taken into account at all. This is why so many small investors are still confused. The crypto media voices that are the loudest often have the least context, the worst research, and the strongest incentive to spread fear in order to get clicks. Then, all of a sudden, we learn that President Trump and President Xi Jinping are going to meet next Thursday. So that's that. On the same day, we also hear that Scott Bessant is speaking with Chinese leaders. That's not just a coincidence. Those are signs. When the global market is under a lot of stress, high-level talks usually happen before big liquidity resets. And resets make windows, which are times when markets that have been shut down suddenly open up. Now let's talk about the 500x talk, since everyone is talking about it. Jake Claver, whose intelligence and experience in this field I really respect, is calling for a huge move this year, possibly into the 4-digit range, if the conditions are right. And while I don't personally predict a 1000 XRP in 2025 without major catalysts, I do think that triple-digit XRP is possible if ETFs launch and liquidity fully rotates in. But the 500x situation only happens during a crisis. It includes a reverse carry trade, unwind, tether collapse, and a break in the systemic liquidity. It is possible that it will happen, but has the world been closer to that scenario than it is now? Maybe not. We know that XRP works in times of crisis because that's what it's meant to do. Provide liquidity when standard rails get backed up, freeze, or break. But design and timing are not the same thing. Not one, not two, but several dominoes must fall in the same year for Jake's bet to pay off. If I'm really sure about XRP in the long term, I don't put dates on 4-digit predictions, but I do think that this year will be very exciting once the shutdown ends and the ETF timeline finally opens. When liquidity providers get the go-ahead, there will be volatility like we haven't seen in 10 years. This year looks like it will be one of the most important ones ever. Uncertainty in geopolitics, changes in regulations, and the upcoming ETF wave have put a lot of pressure on XRP. It could go up as soon as the liquidity chokehold is lifted. And while mainstream crypto news outlets try to distract us, those who actually watch the data know what's happening below the surface. The talks at the White House, the CME numbers, and the pressure for a shutdown all tell the story. And as soon as the dam breaks, you'll see why institutions have been sneaking around behind the scenes. That's why I'm watching the next few weeks with laser focus, not with feeling or hope, but with cold, data-driven clarity. The truth is that XRP will not only move, but it will also show itself once the ETFs go live and world liquidity levels level off. When the lid finally comes off, what price action that has been held back looks like. This is where the real talk starts, because the market won't move in a slow, gentle climb. It will finally break, the prices will change, and it will act like a market that has been under pressure. It will snap. A lot of people still don't get that XRP hasn't been trading in a free market for years. Its price has been held hostage by factors that are meant to limit upward volatility, such as regulatory fog, liquidity throttling, macro uncertainty, and institutional stalling. This isn't because the asset itself is weak, but because the system around it has been unstable. It's finally getting better, but you have to zoom out to see it. XRP doesn't need hype to move. It needs clarity, access for institutions, and a release of cash. Historically, these three things have moved markets more than any story, and right now, they are all coming together. As regulators soften their stances, courts set clear limits, and big institutions publicly get ready, things are becoming clearer. Liquidity providers will be able to expand risk once the shutdown ends, and institutional access is almost finished. All the pieces are in place for full-scale deployment: ETF structures, custodial frameworks, OTC rails, RWA tokenization pilots, and cross-border settlement prototypes. This is why meetings at the highest levels of government are so important. When Trump meets Xi Jinping or U.S. advisors meet Chinese financial delegates, these are not just photo ops. These talks are about trade routes, supply lines, the stability of currencies, and the flow of money between countries. And whenever there is a lot of uncertainty in the world economy, something interesting happens. Alternative liquidity networks start to shine. That is not a theory. It is a pattern. When funding is limited in one system, it looks for ways to be more efficient in another, which is exactly why XRP was made. Not to replace standard rails, but to help them when they get weak. This is also why the CME numbers are so important. There wouldn't be 567,000 contracts and billions of dollars worth of controlled futures volume if institutions weren't positioning early. Futures markets don't set prices. They show how people feel and where smart money is putting its attention. Smart money is showing that they are ready by setting up infrastructure, building hedges, studying arbitrage lines, and getting ready for spot market mechanisms that haven't even been used yet. You don't build those structures unless you think the underlying asset will become important later. So when Jake Claver makes big predictions, it's not because he's on a high horse. He knows what happens when a liquid asset is hit by multiple macro factors at the same time. But even then, the 500x argument doesn't just happen because people want it to. For this to happen, there needs to be a full change in how global liquidity moves. This change includes not only ETF demand, but also systemic breakdowns in other areas, such as bond contagion, dollar liquidity strain, foreign exchange compression, major banking fractures, or the collapse of a stablecoin. Because of these events, other rails have to take weight, and XRP is one of the few rails that is actually made to hold weight under pressure. But guessing the exact time is risky and not necessary. There is no need to know the exact time of a big macro event to know that the indicators are flashing. Bond yields are still changing, and liquidity cycles are not stable. Central banks are trying to control inflation while also dealing with rising debt. And for the first time in years, world leaders are talking publicly about cooperative economic resets instead of plots. Not guesswork, open to the public, proven. For the record, the market doesn't reward the loudest views at this point. It rewards the ones that are best prepared. That's why a lot of small investors miss the big moves. They're too focused on the news, too scared, and too swayed by crypto influencers who don't understand the big picture. At the same time, institutions that these small investors think aren't interested are building back-end systems, filing ETF paperwork, designing custodial vaults, hiring digital asset teams, and quietly building up their derivative exposure. Most people think that ETFs only move prices, but they're really just an entry point, and access points change everything. When ETFs open, millions of buyers gain access to XRP all of a sudden, without ever touching an exchange. This creates a steady flow of buy-side pressure that builds over time. It's not a pump, it's not a hype run, it's a structural flow, and flows that are structural don't slow down. That's why Bitcoin prices went through the roof when ETFs came out, not because everyone loved BTC more, but because ETFs turned idle capital into a way for money to keep coming in. Imagine the same mechanism in an asset with a market value, a small part of Bitcoins, a lot more useful potential, and a circulating supply that institutions can actually lock up. It's hard to argue with the long-term price effects, not overnight rockets, but steady rising demand that eventually forces prices to go up again. But before that repricing even starts, there is something going on right now: accumulation. This is called institutional prepositioning. There has been a steady buildup of activity that is getting ready for the moment when the market finally changes from being restrictive to being open. And that moment is coming. The government shutdown will end, liquidity sources will be able to use their models again, and macro uncertainty will change. When they do, the assets that were most stifled will be the first to gain. This is because ETFs and capital will be moving. The ones with the most built-up pressure, the clearest regulatory road, and the biggest infrastructure footprint. XRP meets all of those requirements. But let's talk about something even more important, how people think about the market. Numbers alone don't move markets. They move when structure and emotion clash. Right now, structure is getting stronger while sentiment is being cautious. This is a great situation for explosive repricing. The price stays low when sentiment is low, even if conditions get better. But when sentiment snaps, when people realize that institutions have been planning behind the scenes, the price doesn't rise slowly. It jumps. There's no question that it jumps. It just moves. And this year is a great one for that change in mood, because world leaders are meeting at a time when the economy is struggling and cash is tight. You have ETF decisions coming up soon, huge amounts of derivatives, and a lot of false information spreading that makes people less excited. Yes, that's the drink. Fear mixed with planning, confusion mixed with chance. Fear and infrastructure came together, and at some point this year, that mix will catch fire. When it does, it won't look like it's under control. It will look like revaluation because the key is being put in place before the starting point. I'm not saying what day it will be, not guessing what time it is, just knowing how things work and staying in sync with the structure that's being built below the surface. This change won't happen slowly once it starts. It will rise quickly and catch people off guard. It won't wait for them to feel ready. Being ready will pay off, not being afraid. This is where the next part of this breakdown is very important. Once ETFs come out, liquidity opens up and the macro situation changes. A new phase starts, one that not many people talk about but could be even more important than ETFs. This is not financial advice and most people miss the upcoming step. The real change won't be in the price reaction at first. It will be in the things that happen after the ETFs go live and XRP starts to move in a structurally better environment. When XRP isn't seen as a speculative asset but as a useful part of global infrastructure, the dominoes start to fall. This is the point where stories change from will XRP go up to how is XRP being integrated. This mental shift is what sets individual investors apart from institutions. Assume a small amount of ETF demand hits the market. It does more than just raise the spot price of XRP. It also changes the incentives for businesses, governments, and financial institutions that are already trying tokenized assets behind closed doors. At the moment, a lot of these institutions aren't sure what to do. They're making tests of concept but not putting them into full use yet because they're waiting to see how regulations change. In addition to infrastructure and liquidity conditions, they are also keeping an eye on the White House and talks of world leaders. They get the go-ahead when institutional demand is backed by ETFs and can be seen, measured, and kept up. This not only makes XRP an asset that is traded more, but it also makes the XRP record a place where transactions can be settled around the world. Many projects have tried to become competitors, but only XRP has the history, compliance footprint, partnerships, regulatory posture, and enterprise readiness that it has been building up for over a decade. These include tokenized bonds, treasuries, debt markets, and commodities. All of these need a neutral settlement rail that can move value quickly and on a large scale across borders. XRP's long-term story becomes clear at this point. When institutions can't ignore a settlement layer that lowers friction, costs, delays, and works directly with the tokenized future that governments and central banks are already planning for, this will happen. We've already seen pockets of this happen, with banks looking into private ledgers, governments running pilot programs, and companies testing on-chain settlement. However, it has been quiet, cautious, and slow. That will all change once the ETF wave starts. This is because institutions start deploying on a large scale when prices become more stable, reliable, and structurally desired. Once they do, XRP goes from being a speculative asset to an important part of the financial system. This alone changes how the market values it. It no longer values it based on how the community feels about it, but on how useful it is, how much it can carry, how much liquidity it covers, and how important it is to the economy. The thing that most people get wrong is that assets that are used for payment in the real world don't act like speculative coins. They act like infrastructure. There will be a real explosion of usefulness after the market realizes that XRP is not just something to trade, but something to use as well. The initial ETF hype cycle is just the spark that starts the fire. And as the global economy gets tighter, and efficiency is more important than ever, settlement efficiency becomes very valuable. Every bank, payment provider, fund manager, and treasury desk will be looking for ways to cut costs and improve reliability, and XRP is the perfect tool for the job. But as this happens, the biggest surprise for the market won't be when institutions start to use XRP. It will be when everyone realizes that the supply is much smaller than they thought. The circulating float will shrink once ETFs start to accumulate, custodians start locking supply, and businesses start using XRP for settlement balances. The crypto market has never seen this kind of structural upward pressure before. It's not a short-term squeeze or a hype-driven run. It's a fundamental repricing based on utility and liquidity footprint. Liquidity providers who have been calming volatility for months will change their stance. Algorithmic trade models that were stopping price growth will switch to growth mode. Market makers who were keeping the market from moving will start to widen their ranges. And once liquidity grows in both directions, XRP will start to behave like an asset that can finally move. The surprise here, though, is that XRP doesn't move slowly once it starts a real growth phase. In the past, when it breaks through suppression zones, it jumps. It jumps in short bursts and goes up in sharp steps instead of a smooth line. When structural demand is behind it, this behavior gets even stronger. That's why thinking there's a lot of time is the most dangerous thing to do right now. There won't be. Markets don't give notice before repricing. When funding models change from restricting to expanding, they move quickly and without waiting for anyone to say anything. This is especially true when institutions are already set up. All of these factors are coming together this year, which is great news. But what might be even more important is the psychological chain reaction that will happen when people understand that XRP is no longer being treated like a crypto asset, but as a backbone asset. As soon as XRP starts to move, not because of hype, but because of math and infrastructure, people will change their minds. When people change their minds, fear of missing out, FOMO, starts to spread. During a liquidity growth phase, FOMO makes the price go up very quickly. This isn't just guesswork. It's based on how markets have behaved in the past. Add to that macro instability, geopolitical realignment, renegotiations in international trade, and the financial world getting ready for tokenized markets. And you have the perfect conditions for XRP to move in a way that most investors aren't emotionally ready for. Most people are still thinking in terms of $1, $3, and $5. They haven't even started to think about what will happen when XRP is priced based on its role instead of how people see it. At this point, you're not looking at what-if scenarios. You're seeing how different trends are coming together to create a global transition moment. This is the time when suppression breaks, clarity emerges, demand floods in, and infrastructure takes over. It's the time when early adopters understand why they waited, and late adopters realize what they missed. Now is the time when being on the right side of the information flow is very important. The smartest people aren't the biggest, they're the best prepared. They read about macro pressure points, liquidity cycles, institutional behavior, and early signals from global leaders. They know that markets don't reward noise, they reward foresight. That's why staying up to date on deeper analysis, institutional level thinking, and strategic positioning is your best bet as we enter the most important phase XRP has seen in years.